Hi everybody! About 2 months ago, there's another 2 new REITs ETF listed in Singapore. And now currently in the market, there are total 5 REITs ETF. So today, I'm going to share with you what are the 5 REITs ETF and what are their key similarity and differences, so that it can help you to make a better decision on deciding which REITs ETF you want to invest in. This is a simplified summary done by iEdge to show the 5 REITs ETF that is currently listed on Singapore Exchange. First, we have the Lion-Phillip S-REIT ETF, followed by the NikkoAM-StraitsTrading Asia ex-Japan REITs ETF, and Phillip S-REIT APAC Dividend Leader REITs ETF. These 3 ETFs have been in the market since 2016 and 2017. You have close to 4 to 5 years of track records. And 2 months ago, there is another 2 new REITs ETF that is listed on iEdge, and first one is called the CSOP iEdge S-REIT Leader ETF, and also the UOB Asia Pacific Green REITs ETF. What are the key differences between all these 5 REITs ETF? So first, let's look at the UOB Asia Pacific Green REITs ETF. It is the only REITs ETF among the 5 of them that invest in Japan REITs. And Japan REITs contribute the major holding for this REITs, which contribute up to 40%, and followed by Australia, and Singapore is only 15%. This REITs ETF is a bit unique compared to the other 4 REITs. Is there is a weighting method that is skewed towards the environmental attribute of the REITs itself, while the other 4 REITs don't have this attribute. So from this country allocation, you can see that actually Japan have the higher weightage of 40%, and the retail, office and special contribute to the main part of the REIT portfolio. Okay, and it's stated that there's total 50 REITs listed in the ETF as of 30th September, as we don't have the latest data yet. However, if you zoom in further, the top 25 REITs itself already contribute more than 80% of the weightage. That means a balanced 25 REITs, their weightage is very small because they only make up less than 20% of the weightage. And the top holding is linked REITs, and followed by 3 Australia REITs. And we can see that for Singapore REITs, among the top 10, they are ranked the last 2, which is the CICT and the MIT. And this explains why Singapore REITs weightage is only about 15%. So next, let's look at the other REITs that actually is the first REITs ETF that is listed in Singapore, which is the Phillip S-REIT APAC Dividend Leader REITs. These REITs focus mainly on 3 countries, which is Australia, Singapore, and Hong Kong, where Australia contribute more than 50% of the holding, followed by Singapore and Hong Kong. And of course, there is some other smaller weightage go to the other Asia Pacific REITs. That's like Thailand contribute 1% to the REIT portfolio. However, do take note that this REIT, the dividend yield is on the low side, it's about 2.15%. This is the 31 REITs in the ETF holdings, and from there some of you may see some unfamiliar name there, as many of them are Australia REITs, as Australia contributes more than 50% of the holding. And the top holding wise is linked REITs will be the number 1, followed by the 4 Australian REITs. After that, then will be followed by the Singapore Ascendant REITs. We can see that actually Singapore REITs only have 2 REITs managed to be squeezed into the top 10 holding for these REITs. Now let's move on to look at the third REIT. The third REIT is called NikkoAM-StraitsTrading ex-Japan REITs ETF. If you want to use your CPF OA to invest in a REITs ETF, and this is the only one currently in the market that you can use your CPF OA to invest. The rest of the other 4 REITs are not CPF OA approved. Let's look at the 44 holding. You can look at the top holding actually is CapitaLand CICT, followed by linked REITs as Centres, Mapletree Logistics, Mapletree Industrial Trust. These are the top 5 holdings for the REITs and it contributes about 40% of the ETF portfolio. Now let's look at the last two REITs. Okay, one is called the Lion-Phillip S-REIT ETF, and the other one is called the CSOP iEdge S-REIT ETF. These two REITs is a pure Singapore play REITs. They only invest in REITs that is listed in Singapore, and the number of holdings they have is the same, 28. So what's the key differences between these two is mainly due to the benchmark they use. So the Lion-Phillip S-REIT ETF, they use Morningstar Singapore REIT Yield Focus Index as their benchmark, while the CSOP iEdge S-REIT Leader ETF use the iREITs S-REIT Leader Index as a benchmark. And iEdge, for those that are not aware, is the indices created by SGX. Okay, let's look at the holding of these two REITs. You can see that the key differences between the number of REITs is that for the Lion-Phillip REITs, they have the REITs called Fraser Hospitality Trust. Okay, while the CSOP do not have that. Instead of the Fraser Hospitality Trust, they replace it with Ascender India Trust. The other 27 REITs is the same. It's just the weightage may have some differences, but the top holding for both REITs, for example, the top holding for CSOP is CICT, which is 10%, but similarly the top holding for Lion-Phillip is also CICT, but it's about 9.93%. So the difference is not that big. For the CSOP REIT itself, they have Ascender India Trust. Okay, and Ascender India Trust actually, if you were to strictly classify it, it is not a REIT. It is a business trust, and actually it is a property trust. But for the Lion-Phillip S-REIT, it is all of the 30 of them are pure REITs. That means there is no property trust or business trust in the component at all. And besides this two REIT ETF, there is also an alternative to this REIT ETF, is a unit trust. We have even a longer track record than these two ETF, which is called the Phillip Singapore Real Estate Income Fund. It has been in the market for more than 10 years. And this is currently the only unit trust fund that invests purely on Singapore REITs. And the benchmark they use is iEdge S-REIT Index, where the top holding is Ascenders, followed by CICT, MIT, and Keppel DC. However, do take note, these REITs, over the long-term period, actually these REITs don't really outperform the index. So this is a summary of the 5 REIT ETF and 1 unit trust that is purely invested in Singapore REITs. So from there you can see, except the Lion-Phillip S-REIT ETF, the other 4 REIT ETF can trade in either SGD or USD. And the only CPF approved is NikkoAM-StraitsTrading Asia ex-Japan REIT ETF. However, when you look at the performance wise, 2 of the REITs is pretty new, so we don't have a longer term track record. We only have a 1 month track record performance, so it can't really tell much about how good are they able to perform. So which REITs, ETF or unit trust should you invest in? You need to voice out to what are you looking at. First, do you want to invest REITs listed in the Japan market? If you are looking at that, then you may want to consider UOB APAC Green REIT ETF, because they are the only REITs that have Japan REITs, and you have a high weightage of Japan REITs. So thus it is called Asia including Japan REITs. However, if you want to invest in a REITs that have a strong exposure to Australia REITs, where you may not be familiar with, so you may want to tap on the ETF to invest in, then you can look at Phillip SGX APAC Dividend Leaders. What about if you want to invest in the REITs that have exposure to the Asia Pacific region, but you want them to be still a Singapore dominant REITs, then you may want to consider NikkoAM-StraitsTrading Asia ex-Japan ETF. And if you really want to invest in a REITs that is only listed in SGX, then you have 2 choices. You will have the CSOP iEdge S-REIT Index ETF or the Lion-Phillip S-REIT ETF. So of these two, you will need to make a decision of which one you prefer. The differences between these two REITs is only 1 counter different. And this counter may also subjected to change when they do a quarterly review. And what happens if you feel that you don't want to invest in ETF that need to pay brokerage commission, you want to invest on unit trust because unit trust you don't pay any transaction cost, then you may want to consider Phillip Singapore Real Estate Income Fund. So these are the options available for you to look at it. And if you want to invest in an ETF, do also take note of the fund size. Do take note that Phillip SGX APAC have the lowest AUM, which is about 20 million, but it's the longest running REITs in Singapore. And the one that have the highest AUM is the NikkoAM-StraitsTrading Asia ex-Japan ETF. And of course, when it comes to expense ratios of the among the ETF, the Phillip SGX APAC have the highest expense ratio, while the new UOB Green REITs ETF and the CSOP REITs ETF, the actual expense ratio actually is not really known yet because they are pretty new. We only really know that how much is the expense ratio after really they have run for quite a while. We know that when buying ETF in Singapore, the minimum lot size can be 10 or 100. But come 17th of July this year, all the ETF that's listed in SGX, the lot size will be reduced to 1 unit. You can actually do dollar cost averaging on the ETF at a smaller amount. For example, if you were to buy a REITs ETF that is trading at $1, your minimum investment amount is $1. The capital outlay to buying an ETF is much lower than you buying a stock. But however, do also take note of the brokerage commissions you need to pay, and depend on what type of brokerage account you are using. Some brokerage account require minimum of $25. Then you don't make sense for you to buy 1 unit of the REITs ETF where you pay let's say $1 and you pay $25 brokerage commissions. Some of the brokerage account there is no minimum, they only based on a percentage of the cost. However, do take note of SGX clearing fee where they may charge you 30 cents per contract. These are the brokerage costs you need to take into consideration when you want to invest in the REITs ETF. And what is the benefit of buying a REITs ETF? You will relieve your headache of corporate actions by the REITs. We know that when you buy a REITs, there's something called equity fundraising, preferential offer, right issues, where you may need to subscribe. Some of them, when you don't subscribe, you'll face dilutions. But buying a REITs ETF, you will no need to worry about all this corporate action because the ETF manager would auto take care of all this. But however, do take note that if you were able to do a right risk picking itself by picking the correct REITs, your return can be very much better than the ETF. Where you can see for this 5-year annualized total return, some of the top few REITs have achieved more than 15% compounded return over the past 5 years, while the REITs ETF can only achieve about 5% compounded returns. So the gap is about 10% different. But that also voice out to that if you have picked the right REITs. If you were to pick the wrong REITs, you may suffer losses even after invest for 5 years. So this is a trade-off for buying a REITs ETF and on picking of REITs. It boils out to depend on what are you looking at to build on your portfolio, whether a REITs ETF suit you or picking up individual REITs suit you. And if a REITs ETF suits you, then which type of market exposure you may want to expose it. You say that you may want to expose in the Australian market, Japan market, that you don't know what REITs to buy, then maybe a REITs ETF may be suitable for you also. And that's all I have shared with you today. And if you feel that this video has benefited you, do remember to like and share this video. Do remember to leave also your comment below to let me know what you think. Do remember to subscribe and press the notification button so that you will be notified on my next video. I shall see you in my next video. Bye bye.